The markets had a failed Santa Claus rally, and that historically does not bode well for the year. The markets are long overdue for the average yearly 10% correction. Let's get into analysis on SPY, QQQ, IWM, TLT, and multiple requested tickers to see which way the markets could be headed next. Nothing I'm about to share is financial advice, so please consult a licensed financial advisor before making any financial decisions. Welcome back, cool cats. I got a quick reminder that everything I'm sharing is on the Thinkorswim platform that does not adjust for stock splits and stuff, so make sure you double check price and levels on your own platform based on where the key levels are because they can differ. We're going to kick things off with SPY on the 1 hour time frame. You can see the upper resistance line here in orange and the lower support line here in orange of the symmetrical triangle that's formed on SPY. Notice on Friday how we actually broke below support, wicked back up into it, and then came back below support again. If we zoom into the 15-minute time frame, we can see it's actually inside of a pretty well-defined descending channel here in this kind of dotted orange line. So there's a potential that we could come back up and retest previous resistance tomorrow somewhere around 582. Might even come up to this resistance line of that descending channel, maybe around 584. But ultimately, I would expect us to get a very, very strong bounce if we touch somewhere around 574.85 to 575 tomorrow. And if I quickly switch over to QQQ, you can see the same descending channel has formed. I would expect there to possibly be a very strong bounce around 502, but obviously that key psychological level of like 500 even. If we switch back to SPY on the 2 hour time frame and I throw up the volume profile, we can see that the point of control here is right around 570 even, which if we look back here with this ascending channel that it was in, we had a lot of bullish volume that came in here that pushed the market back up. So if we could actually come down and retest that and push down below it, you could potentially have a lot of trapped bulls there getting liquidated. So the breakdown target of this symmetrical triangle, if it actually were to break this main support line here right around 575 to 578, it would be targeting somewhere around 555 per share. But zooming out to the 4 hour time frame, if we look around this 570 area here where there's a lot of trapped longs, there is also a very, very key level right around 565. We can see multiple times we came up, rejected sharply again, finally got back above it. But I have to wonder if the bearish trend is strong enough to break through the bulls at this level. Would it be enough to cause basically a waterfall event all the way down to that 555 area? And is it possible that we would see a large bounce at that area, come back up, retest as previous support, maybe now acting as resistance, and then finally get the massive breakdown of the massive rising wedge patterns we've been covering for months? If that happens, we can zoom out to the daily time frame. We can see the big rising wedge pattern that we've been covering. We had broke down below the support line. We came back up. We just kept retesting until we finally hit this main resistance line in red, which I've also covered. If you go out on the weekly, you can see it goes all the way back to October of 2007. So if, and it's a very big if, but if this is this rising wedge finally breaking down, it's targeting somewhere around 530, give or take, which also happens to line up perfectly with this previous resistance line, which could now act as support. And on the daily, if I throw up all my indicators again, you can see that we are below cloud support. We're resting on the 100-day simple moving average, but we also wicked below. We touched the lower Bollinger Band here and pushed back up a little bit. But that could just as easily be because we touched the lower support line of this descending channel. And then the last thing on the weekly time frame, when we look at this RSI pattern, this ascending triangle pattern, we can see that strength finally broke below this main support line that had been holding up for months. So this really makes me wonder if on a weekly basis, if the market is not going to start pushing back up, at least until it gets into an oversold condition again. Now, we can't look at the bear case without looking at the bull case. Alternatively, if price comes down on SPY and touches this main support line somewhere between like 575 to 578, if that support line holds, then this measured move of the symmetrical triangle pattern gets pulled down, and it could basically be targeting a gap fill from December 18th. And of course, that number would be somewhere around 604 to 605. When we take a look at QQQ, you can see that there's a lot more going on. I shared in my last video that it looks like it's in a descending channel. Initially, it looked like a symmetrical triangle with this upper resistance line here in blue, lower support line in blue. And we can see how it previously broke below this support line, broke below this really very strong support line here in orange, came back up, hit the previous support line of this ascending channel that it was in, and then rejected, came back down again. Now, if you look, twice already, we've hit this key level of right around 505. We hit it, we got a very strong bounce, rejected off of resistance, came back down, got a very strong bounce again. Now, the question is, this time we actually wicked below, pushed back up, but if this descending channel is holding and this breaks, we zoom out to the 4-hour time frame so you can see this a little bit better. See this upper resistance line and this lower support line? That's how wide of an ascending channel QQQ had been in. If we take a measured move of that symmetrical triangle, and potentially we could even look at it now as more of like a descending triangle with this line right here being the upper resistance and this blue support line forming the base. If we were to get a breakdown from that, we could see it actually targeting somewhere around like 475 per share. Now, I would expect a very strong bounce to occur if it hits this lower support line, and that's actually where I would be looking to buy, but you have to wait for confirmation. And notice how I mentioned we're very close to breaking below a key support level. That level I'm talking about is what I call the exuberance line. This goes back all the way to the 2008 financial crisis. Anytime that QQQ has been below this line, it's been in what you might consider a normal uptrend. But anytime it gets above it, it's in exuberance and it's getting very close to these key resistance levels. So if we zoom a little bit in again, we can see just how close we are to that line with the price right now. Now remember this RSI symmetrical triangle pattern that I keep sharing. The lower support line here is somewhere around like 40 to 41 on the RSI. We have not touched that lower support line yet, which also indicates to me that at least on a weekly basis, QQQ could continue a little bit lower. But zooming back in on the 4-hour time frame, you can see right here, if support holds again, the next key resistance level would be right around either 516 to 517, depending on which day it hits. Just a quick recap. If the massive rising wedges are finally breaking down and we're getting that 10 to 12% correction, on SPY, we could expect SPY to come down to somewhere around the 530s, the low 530s. On SPX, that would be somewhere around 5350. And on QQQ, that would be somewhere around 465 to 467. But again, this lower, very, very strong support line would have to get broken for that to occur. And if that occurred, I would have to wonder just how bearish the market had gotten. But, as you know, buy when there's blood in the streets. So if the market got that oversold, it could actually be a really amazing buying opportunity. Please like this video if you think the markets have begun at least a 10% correction, and feel free to leave a comment with your thoughts. And while you're already down there, don't forget to subscribe and tap notifications so you won't miss these market moving updates. We've always got to keep our eyes on NVIDIA, just like I shared in my last video, this inverted head and shoulders pattern. The pattern target here in orange almost played out perfectly, but we hit this previous all-time high and it definitely acted as resistance. It was targeting somewhere around $156 a share, maybe $157. But as you can see, once we hit that all-time high and just kind of poked above it just a little bit, it sold off very, very sharply. And you can even kind of see it wasn't the best formed one, but there was a bit of a rising wedge that was forming right into that price action. But notice now there's also a bit of a falling wedge that's forming right into this very, very key support level from where we bounced off of the last time. And I always have to zoom way out to even show this, but I mean, this support line goes all the way back to October of 2022. So if, and it's a very big if, this giant, like multi-year rising wedge finally plays out, the measured move of that, if it breaks this key support line somewhere around 135, is it could come down all the way down into the low 90s. Now, of course, if that support line holds up again, yet again, we could see this coming all the way back up and retesting the previous all-time high, around 152 to 153, or if it wanted to come up and touch this main resistance line here, we could even see it coming up to around in the 160s. It all depends on when it hits these key areas. I think it goes without saying that if this massive rising wedge actually finally plays out on NVIDIA, that could be the trigger to bring the whole market down with it. Now that said, with NVIDIA, if it were to break this main support line and confirm it as resistance, we would expect to see another bounce because of this descending channel here. We would expect to see a bounce somewhere in the low 120s, followed by, if it broke more levels, somewhere around 115 even, and then again somewhere around 110. After that comes around 107, and then roughly 95 to 96 even. Looking at IWM on the 4-hour time frame, we notice this very well-defined ascending channel here in orange. Well, we just recently broke below that. But like I previously shared, there is a very strong level here right around 211. That's support. There's also a demand zone here from about 209 all the way up to about 215. So there's always the possibility that this closes below that support line, but hits demand and then pushes it back up, but we have to wait to see. So if that occurs, we could expect potentially IWM to come all the way back up to the previous all-time high, right around 244 to 245. But of course, it would have to get through this supply zone around 227 to 232, and a very strong level here around 233. And of course, these numbers I'm calling out, this would probably take days or weeks to play out. Now, if you hadn't noticed this yet, this right here looks an awful lot like a bear flag. Now, if we take a measured move from the recent all-time high, come to about the middle of the bear flag, and we drag this down, if that's actually what's happening, we could actually see IWM target somewhere around like $199, maybe $200 even per share, which also happens to be a very key support level. If we zoom out to the daily, we throw up all of our indicators, we can see we've got the 200-day simple moving average here, the lower Bollinger Band here. If it could actually break below that, it would be a very bearish sign, and it would add even more confluence to the thought that the whole market might be correcting. Looking at TLT zoomed all the way out on the weekly time frame, we can see they closed at 85.46, which is dangerously close to a very key level here, right around $82 a share, and the all-time low is at 80.51. If I zoom into the 4-hour time frame, we can see in this light green here, TLT is in a very well-defined descending channel that goes all the way back to September of 2024. And if you notice right now, it's actually right at the bottom support line of it. So there is the potential that TLT is going to want to come from about $85 a share and at least retest this previous resistance line around $86 to $87 a share, maybe even come up all the way to about $90 to $91 a share. But you have to keep in mind, this is all in a downtrend. And even if you buy here expecting it to come up, there's always the potential it just continues to go lower. But eventually we would at least expect it to get a dead cat bounce. So why are bonds going so low? Well, Dixie and 10-year yields have continued to power higher, and the market is pricing in increasing inflation. But here's my black swan thesis as well that I have never shared before. If we get a black swan event like WAR, a credit event or crash, recession, etc., Congress might change the law and force the Fed to monetize fiscal policy. If that happens, the Fed would likely print unprecedented trillions of dollars to buy up treasuries. Those dollars would make their way into the economy and lead to hyperinflation because the Fed does not control the long end of the yield curve. Point in case, long-term yields have risen by a proportionate amount to what the Fed cut. If this all were to happen, the long bonds, aka TLT, would continue a serious bear market. And I have to wonder if this is what the bond market has already started pricing in. Since they're related, let's take a look at Dixie. Remember this massive falling wedge that I said was targeting somewhere around like 112? Well, if we zoom into the 4-hour time frame, we can see these light blue lines here. We've got a lower support line and an upper resistance line here. Now this obviously looks like a rising wedge, so I would expect it to break down, and to add confluence to that, we have a previous very strong resistance line here in green, right around 110.12, maybe around like 110.20, depending on where it got hit, as well as we're getting up into supply, this shaded green area here. So if this were to break to the downside, we would expect Dixie to come down to somewhere around like 105.20, maybe around 105 even, which would also be touching this previous very strong support level here. But it would be stupid to assume that rising wedges only break down. They break down about 80% of the time, but there are times when they break to the upside. I've seen this happen on Meta before. If this were to break to the upside, measured move would be targeting somewhere around 113. And if we zoom way out on the weekly time frame, you can see that this main upper resistance line goes all the way back to 2001 and 2002. So it's a very definite possibility that if Dixie were to continue this very strong bullish trend and hit right around 113 to 114, we could see a very sharp rejection for Dixie off of that level. Looking at ADD, the market breadth indicator, I'm sharing something with you all for the first time because I just recently saw it. If you notice this upper resistance line in light green and this lower support line in green, this is on the daily time frame. I typically don't look at the ADD on the daily time frame, but I just thought, maybe I'll take a look at it. Notice how every time we touch this support level, we got a very strong bounce, and every time we touched resistance, we got a very sharp rejection. This is indicating, like I've been saying for multiple videos, the market is heading into a period of very strong volatility, of big swings up and down. So on Friday, we actually wicked below that support level. So my question is, are we now going to push back up with having strength with the overall market? Or was this just a little bit of a dead cat bounce and we're actually going to break that support line? If we zoom in on the 1 hour time frame, we can see this descending channel that I've been talking about. We were in it. Every time we touched support, we finally broke back above. We treated previous resistance as support twice here, came back down, and now we're kind of right below that resistance line again. But again, we're also at this negative 2000 line, which is an indication that the entire market is generally oversold, which obviously, as they say, when there's blood in the streets, you go out and buy. So the technicals on the ADD are indicating the market may actually want to go back up. At the same time, though, it's showing a lot of weakness. And it's very rare to get into this like negative 2,500 to 3,000 range, but it's not impossible. Usually if you see something like that, it's capitulation. It's the bulls are just selling everything. Looking at the VIX on the daily, this is one of the very significant I want to share with you is if you notice this upper red resistance line here, almost every single time that the VIX touches it, it rejects pretty sharply. And then we've got this lower support line. Almost every single time that it touches it, it bounces sharply. Notice what pattern formation this is actually making over the course of multiple years. This is a falling wedge. This is indicating that at some point, the VIX is going to break out in an insane way. If that were to happen, we would be seeing VIX probably in like the high 40s, just based on the measured move. But then again, once you get this breakout, sometimes people are just running over each other to sell as much as they can. And with a period of consolidation of multiple years, I mean, who knows how high this could go? If we use these rising resistance line here and here as reference, there's always the possibility that where these two converge is like over 80 on the VIX. And if you zoom out on the weekly time frame, you can see the only two times that that's happened is back in 2008 and again in 2020. All of that said, resistance is resistance until it's broken, and support is support until it's broken. So right now, there's a potential that we could see the VIX come back up to somewhere around 22 to 23. If this acts as resistance, the lowest it could go would be somewhere around 11 before potentially seeing a very strong bounce there as well. Of course, there's also a support level here right around 15. All right, we've got 3 requested tickers, so if you see your requested ticker today, please make sure you like and leave a comment down below. First up is Sensei Biotherapeutics. First, we're taking a bird's eye view on the weekly time frame. We can see where all the key levels are. Then if we zoom in on the 4-hour time frame, look what we've got. We have a lower support line here right around 41 cents, and then an upper resistance line that started on October 21st, and it goes all the way up to about 87 cents, connecting these tops here as well. So if this is a legitimate descending triangle, we take this measured move right here, we take it from here to here and drag it to not just from where it broke out, but from where it retested. So it retested here, right around 47 cents per share. If this plays out to its fullest, it's actually targeting this previous high here, somewhere around like 87 cents per share. Now, it depends on whether or not this previous resistance actually acts as support, because this always could come back down and retest it maybe once or twice more. But as long as it acts as support, it is targeting this previous resistance line around 87 cents per share. Next up, we're taking a look at AbbVie. I had actually charted this on Moomoo, but then when I got into Thinkorswim, the charts definitely look different. And this is like one perfect example of how one platform can look one way and they look a little bit different on the other based on splits and stuff. So if I zoom in just a little bit more on the weekly time frame, we can see that we had a supply/demand zone here. As long as you're below it, it's acting as supply. As long as you're above it, it's acting as demand. If I zoom in on the daily time frame, we can see that descending resistance line and where it broke out. So right now, AbbVie is actually in an ascending channel. And if we zoom in even more on the 4-hour time frame, we can see that the lower support line could be met somewhere around like $170 to $172 per share based on where it hit. If it came that low, just based on the technicals, we could see it at least coming up to this previous all-time high around $207 a share. And if that were to break, we could see it coming all the way up to about $217, $218, $220. Now, alternatively, if this were to break down, if it broke the support, we would probably see it retest around 162 to 163 and might even see it come back down and test this previous resistance line and see if it acts as support around 148 to 150. Last but not least, we're taking a look at Main Street Capital. Looking at the weekly time frame, rather than very well-defined levels, we had a lot of supply and demand zones where price either came down into it and then bounced from it or came up into it and rejected off of it. If we zoom way in on the 1-hour time frame, we can see, and it's kind of hard to tell because there is a lot of low volume on this stock, but it's in a descending channel right now. It just previously hit this upper resistance line somewhere around like $57.75 to $58 a share. It could come back down and it could bounce maybe around $56 a share. But just keep in mind, as long as it's in this descending channel, every time that you go long on this, you're actually taking a chance on this just continuing to go lower. If we zoom out on the 4-hour time frame, if we assume that this descending channel is actually bringing us back down into support, I would expect there to be a bounce somewhere around 55.50 to 54.50, which is where it was range bound for multiple days. And it finally got this impulsive breakout, made a new all-time high, and there's always the potential that this is going to be treated more of like a bull flag and then final breakout. Or it could just be that the bulls are just plumb tuckered out. I'm about to share today's trading rule to live by, but if you haven't already, please like, share, and subscribe. Best of luck, cool cats, and God bless.